Good afternoon and welcome back to Money Control live stream. You're watching the closing bell. I'm Santosh Nair.
And I'm Yatin Mota.
Benchmark indices managed to snap a two-day losing streak today. However, the Nifty continues to face resistance around the 18,600 mark. The index just about managed to close slightly above the mark. The big story today really was in the second line stocks. Mid cap and small cap shares had a very good run today. And overall in sectoral trends, you had mostly shares from the IT, realty and metal sectors doing very well. Banking shares were bit sluggish, and among the prominent gainers among Nifty stocks, you had BPCL and mostly IT names, HCL Tech, Infosys, TCS and NTPC among the non-IT stock, whereas among the prominent laggards of the day, you had Power Grid, Cipla, Larsen & Toubro and Titan. Well, before we dive into the stocks that caught our attention today, Yatin, clearly all the action seems to be centered around second line stocks, small caps in particular, and the way they are being bid up, I would say, makes one comfortable, whoever has been in the market for more than a decade.
Absolutely, Santo. And before the show, me and Santo were discussing the kind of frenzy or the kind of momentum that we are looking at for small cap and mid caps. Obviously, it has not reached to exuberance or overbought condition. But if you look at the overall market sentiment right now, Santo, it's towards the mid cap, and the mid cap index has already hit a record high. So I think the momentum players, the technical analysts, all of them are really chasing the mid cap stocks, and probably that is the reason why the cash volumes for the markets have really picked up in the past few trading sessions.
And Yatin, you made this point that we're still not at a level which seems to indicate exuberance, but I think we are almost getting there, and the stocks, many of them hitting the upper circuits with ease, and this despite the fact that recently the exchanges came out with added surveillance mechanism for mid and small cap stock, and despite that there is no stopping the upward move in these stocks.
That is particularly, since you brought up the point, that is particularly for the SME stocks which have been upgraded to the main board exchanges, and after a certain run up they need to be limited, because I think this was one place which was probably getting misused, and the regulator has put a plug as far as this loophole is also concerned. As
far as the overall market is concerned, again Yatin, you're seeing resistance at higher levels. For about a month you had one-way FII inflows, but now those numbers seem to be changing a little bit here. And if you look at the mutual fund inflows also, mixed trends there.
Mixed trends,
fund managers are saying is that lump sum money appears to be slowing down a bit, although SIP continues to remain robust. And with that, let's quickly move on to the stocks on our watch list this afternoon, starting with HDFC AMC. The stock came back strongly from around 1700 levels to about 1900 levels, but once again there it's run into resistance. But today again it managed to snap a two-day losing streak, closing about 0.6% higher. Now some brokerages have begun turning bullish on the sector. Nuvama is one of them. However, the big concern clearly remains the regulatory caps that market regulator SEBI is proposing for AMCs, and this move is expected to hit the larger AMCs harder. So according to Jefferies, large AMCs equity fees could fall by close to about 30 basis points on the proposed caps on the fees of equity linked assets under management, and for the larger players the impact could be as high as 50 basis points. So these are some of the factors which have been holding back HDFC AMC, and besides that also the fact that Aberdeen Standard Life has been continuously paring its stake in the company for a while now. That is also another added negative for HDFC AMC.
True, and that is one AMC stock which has had a great move during the listing, but had some issues now with respect to the regulatory regime. Moving on to the next stock, Interglobe Aviation stock almost closed near the day's low, and this was after a CNBC Awaz exclusive report in which sources told us that the promoters or the Gangwal family is looking to offload 5 to 8% equity. Remember, in February 2023, around 15th of Feb, the Gangwal family had sold their stake for close to 2,800 crores. And now we have been told that 5 to 8% equity is what they're looking to sell, which is worth 5 to 7,000 crores. the lock-in for the Gangwal family with respect to the last block deal opens on July 15th. So probably in the next, 1.5 months, probably the promoters would try to access the market again in order to sell their stake. Remember, still the Gangwal family holds 30% equity, and after the headwinds because of the lower crude prices as well as the insolvency surrounding GoAir, the shares of Interglobe Aviation have moved 30% in 3 months. So probably the promoters would find it lucrative to monetize their stake since they have an intention to sell. And if you look at the brokerage reports also, Santosh, most of them had indicated that apart from valuation, one key overhang for the stock of Interglobe Aviation could be the selling, which is a large one by the Gangwal family. Just to tell you, near about February and in September 2020, in 2 tranches, the Gangwal family till now has sold 6.8% equity.
Well, that's clearly the market is aware of this overhang, and but for a while it did seem as if investors were willing to look past this, because you did have favorable tailwinds in the form of lower crude price. Again, operating expenses are basically 50% linked to crude prices, so there's some relief over there, and the improvement in market share because of the problems at Go First and SpiceJet. That's also a big benefit for Interglobe Aviation. However, this that's the supply overhang, that is something that seems to be worrying investors, and as a result you saw pressure on the stock. Well, the last stock on my watch list is KEC International. The stock has been moving up steadily. Today it was among the prominent gainers of the day, rallying by close to about 5%. Nomura has come out, rather it's maintained its buy rating on the stock with a target price of 598 rupees, and according to Nomura, the company is now focused on improving its EBITDA margins and cash flow. This has been a cause of major worry for investors for a while now, that's been holding back the stock, and according to Nomura, the part of the pending receivables from its Afghanistan business that should flow in the first quarter of this fiscal, and the order book looks pretty robust at this point in time. Yatin, in general, capex plays have been a big hit with the market of late. True. And I think so far there were some concerns about KEC International, but right now the market just seems to be of the view that anything in the capex, anything which has to do with the play on capex should do well. That probably explains some bit of change in outlook on the stock.
In fact, one interesting thing that the management said in the investor meet was that they are about to receive 150 crores of US aid, the money which was stuck in Afghanistan, and they are talking about 400 crores coming in from the World Bank with respect to the stuck Afghan projects. So if this money comes in, their large part of working capital will ease. And more importantly, they have been guiding for 6% EBITDA margins moving ahead in this current financial year, which would move up to 9% in FY25. So some serious, guidance given in by the management of KEC International. Obviously, it is to be seen how they deliver, because L&T also promised high margins. They couldn't deliver in the last quarter. But yes, as you mentioned, any capex theme, any infra theme, and we have seen momentum in all of these names. Well, that's about KEC International, and if you talk about the stock on my radar, that is CMS Info. Now, on Friday, there was a very large block deal, over 10% equity changing hands, and we had a lot of marquee investors coming in to buy the shares of CMS Info. Now, if you look at the buyers in CMS Info, we had the likes of IIFL Mutual Fund, Value Quest, SBI Mutual Fund, Norges Government Pension Fund, and ADIA, which is Abu Dhabi investment authority. They picking up a substantial stake. We had the shares which jumped nearly 7% in trade today after marquee set of investors bought shares from Sequoia. Now, and Sequoia, more importantly, has been exiting a lot of their India investments. To be particular, they sold their entire holding in this particular name, probably because of which the stock moved up quite sharply in trade.
Just looking at the latest quarterly numbers, the top line growth has been just about flattish quarter on quarter. Yes. However, the margin seems to have, the gross margin seems to have seen some bit of improvement there. It's gone up from 27% in the December quarter to 31%, and at 18 times trailing EPS, 18 times trailing earnings, the stock doesn't look too expensive also.
Yeah. Just to clarify, it was not Sequoia which sold. Sequoia sold Coca-Colas today. Here, Bearings Private Equity sold their shares. So yes, private equity exits in CMS Info as well as Go Colors in the last 2 trading sessions.
Well, and with that, it's a wrap on this edition of Closing Bell. Thank you for watching.
जुड़ने के लिए बहुत-बहुत धन्यवाद.
We'll be back with you again tomorrow morning at 9 a.m. Till then, stay logged on to moneycontrol.com for all news, views and analysis.